and they see stops building, they'll attempt to push price up to trigger those stops, close out some of the long positions and make money on the way down. You have to realize a lot of this goes on behind the scenes. It's all software driven. It's not like they have somebody sitting at the desk like they used to mapping out these orders. That's why the markets have sped up quite a bit. But if the professional money sees that there's a continued time of high volume, then they know, well, on balance, the market makers are probably long. Okay, so they know the market makers are going to want to sell. And let me say this before we get going. This is a hypothetical situation. I'm trying to illustrate to you how the mechanics of the market work. It doesn't mean that this happens all of the time. Remember, anytime you start thinking to yourself that this has to happen all the time or this is going on all the time, you're in real danger of bad thinking. This is really more of a market principle. So if the professionals see high volume, they know the market makers are long, so what they might do is start coming in with some buy orders to try and induce the market makers to sell. Now if the market maker sells, of course, then that's going to push price up. That's why you get the little dipper action, because if the professional money is buying in here as price is coming down a little bit, say they have a range of prices, one thing you have to remember is professional money doesn't buy like you or I. Okay, they don't think in terms of very small stops. These people don't have just a couple of $1,000s. They've got hundreds of millions, if not billions of dollars to work with. So if they get inside of a 70 pip range, that's nothing to them. That's pretty much slippage. So if they see the market pops up, it can't continue, and then it comes back down, this is the little dipper formation. And now what we're looking at here is that the market did indeed come down. Volume stayed high all through here, pushed back up, volume spiked up again. Now price is relaxing. Now we have a potential little dipper entry where if the professional money is behind this, then they want price to be in this area in order to test. Once they've tested the price, then it's free to move up. Now I know that was a very fast explanation. You may want to rewind this a couple of times and review it. It is something that you have to get used to. It helps to remember that professional money buys on the way down and they sell on the way up. Okay, it's exactly opposite of what most retail traders think. Number 2, times that I can trade and how much time per day it takes monitoring. I monitor a trade just for a couple of hours a day. The sweet spot hours are inside of the kit, typically between 2 a.m. Eastern Standard Time and 12 noon Eastern Standard Time. If 2-to-1 ratio, why take 80% before 1-to-1? It's, that is a simple question with a very robust answer. The best way to answer that really would be to go back and review the last couple of Q&As. Where I talk about expectancy and ratios. Is basically a money management decision. And there really are two camps in this. There are some people who say, taking profits that early is a bad idea, and yet there are other professional traders who say taking profits early is a good idea, moving your stop up is a good idea. Remember, the question implies that there is a right answer. And remember, there's no way that we can know the future. There's no way for us to design a system today that's going to be optimal for the future because we don't know the future. Okay, it's not like we have a system where everything is known to us, like building a car. Okay, if you build a car, you have a production line, and if you tweak the system, you tweak things here and there, that it's going to come out better in the end. It's just like cooking. If you're cooking and you've got to make eggs and bacon and potatoes and toast, you don't start making your eggs when you start cooking the potatoes. And you don't start cooking the toast when you start cooking the bacon.